Lately, I've been getting a lot of questions like, are we going back into a crypto bull market, or is the Fed going to push Bitcoin, crypto, and stocks into bear markets? And it's times like these that I think it's really important to take a look at our portfolios and plan for the future. So in this video, I'm going to walk you through my crypto portfolio and my trading plan for 2023 and show you how I'm planning on making millions of dollars in crypto over the next market cycle, just like I've been doing for the past 10 years. So let's start by taking a look at the 30,000 foot overview of my investment portfolio and the different asset classes that are in them. And I'll tell you, these percentages vary widely, right? During a crypto bull market, this will look dramatically different than where we are right now. So let's just do a run through of the overview here. First is stocks, which I've been investing in the stock market for over 20 years now. So as of right now, where we are in the market cycle, this is about 40% of my portfolio. And crypto right now in the depths of the bear market is only about 22% of my portfolio. And I'll go into a little more detail about the different capital buckets, but this is everything, including cold storage and active trading capital. And my comfort zone is somewhere in between 15 to 50% of my net worth being in crypto. During bull markets, there are periods of time where my crypto positions grow to be over 50, 60% or more, but I'm just not comfortable holding that because I know that crypto is such a volatile asset class that I don't want to see my total net worth go down by 50, 60, 70, 80% in bear markets. That's just my personal comfort zone. And some people are comfortable having all their net worth in crypto. And some people look at crypto and say, I don't have any risk tolerance for that. So this is just my comfort level, is somewhere in between 15 to 50%. And again, that varies dramatically depending on where we are in the market cycle. And then the next asset class is real estate, which is currently about 20%, and then about 10% of cash, right? Now, this is looking at my total portfolio, not just my trading accounts, which we'll talk about in a second. And then VC, venture capital investments or angel investments in startups is right now about 5% because I recently cashed out of 2 startups that I invested in that were really nice winners over the past 5 years. And then metals, like precious metals like gold and silver and platinum and some other collectibles and just non-paper assets are about 3% of my portfolio. So that's step one, right? You look at your total net worth and then you figure out where you're invested. You might be 100% cash. You might be 100% Bitcoin or somewhere in between. Everybody's different, but your starting place is looking at the whole pie and saying, where is my net worth divided up into? And you might just be starting, right? You might have a really small amount of capital, or you might be a billionaire, which takes a lot more effort and work to manage that much capital. But even if you are starting with a small amount of money, I think it's smart to begin with the end in mind and imagine that you are trading and investing with your goal amount. Let's say your goal amount is just $1 million and you have $10,000 to your name. Today, you want to behave as if and make decisions as if you already have that $1 million, right? That'll help you get there quicker. Now that we've talked about the overview, let's dive deeper into this crypto portion of the portfolio. And in the last video, I talked about the difference between cold storage and trading capital and startup investing. So make sure to watch that. I'll link that up if you haven't already seen that. But let's go ahead and dive into my crypto portfolio. And what we're taking a look at here is my Wealth Building Communities Discord channel. And under my crypto watch lists, I do regular portfolio updates and watch lists of coins and projects that I'm looking at. But this was a couple days ago where I gave a breakdown of some stats where I said, right now, my cold storage capital bucket, basically my HODL stack, right, is about 88% Bitcoin, about 10% ETH, and just a couple percent Monero. And I did Monero as kind of a hedge on privacy coins if they became absolutely necessary. But you can see the lion's share of my HODL stack or my long-term cold storage stack is Bitcoin. And what I do is every bear market, I accumulate more Bitcoin, I buy it or earn it, and then stack it away. And I never sell that. The goal is over time, that bucket just grows and I build into that as I've been doing for the past 10 years. And I'm able to increase that position size in terms of Bitcoin or sats and also dollar value, right? I measure those by those 2 benchmarks. And then the second capital bucket is my trading capital. This is for cycle trades where I'm in a position for 6 to 18 months. This is also for swing trades, anywhere from a couple of weeks to a couple of months, and even the occasional day trade or scalp. As of a few days ago, I was 55% fiat. So I had about 55% of this capital bucket was in US dollars. 10% was in Bitcoin because I started to build into a position over the past few months. And then 30% was actually ETH because I had a pretty large position back in 2020 and I sold a lot near the highs, but I did have a runner. And if you've been following me for a while, you probably remember how I nailed the pivot high here in Ethereum when it came up and almost tagged 4,400. I did a tweet storm here on the 12th of May, 2021, where I basically said there's only a few days a year where I make major changes to my crypto portfolio. And today was one of those days. I took profit on some of my largest positions. And I went on to talk about, I don't go all in or all out. I sold a big portion, but I actually had a runner that I've been holding from early 2020 in Ethereum. And what I did the other day was I actually sold the rest of that. If we jump over to my trade alert here from a few days ago, I gave my reasons why I sold. I always do these like in-depth walkthroughs of my thinking, but I said I just sold some more ETH to raise my cash position to 75%. So right now in my trading capital bucket, I have 75% cash and I have some Bitcoin and a little bit of Ethereum and then some small runners from other trades from the last market cycle. I call these like moonshots, right? Where like right now, 5% of my trading capital is in altcoins like Link and Curve and Tezos and SNX and stuff like that. And usually what I'll do is after I make a lot of money on a trade, I'll usually leave like a small runner in case the thing just goes nuts, and then I'll sell the rest of it. So I'm still holding a few alts, but as of right now, because of the market conditions, I haven't been going heavy into alts. I've been being very, very patient because we have a few things going against us right now, right? We have the Fed that's really hawkish, raising rates. We have Gary Bad Guy Gensler in the SEC that's just attacking crypto right and left. And we're still really close to the FTX implosion. And I think there's still a lot of alt projects that are just overvalued, things that I look at that have hundreds of millions of dollars of market cap that are essentially worthless. So I think there's still some culling that needs to be had in the crypto space, meaning a lot of bad projects still need to die. So I've been waiting and being very patient. But as you can see, I'm cash heavy right now. I'm diversified. And some people are surprised when they hear in a bear market that my stock portfolio is actually larger than my crypto portfolio. And that's by design, right? What I want to do is smooth out my returns over time. Again, if I was 100% Bitcoin, that means in a bear market, I'm going to see a drawdown of my total net worth in between 70, 80% or more, right? I'm not comfortable with that. So what I do is I use the stock market, I use angel investing, I use real estate to smooth out and decrease those drawdowns in my net worth. For example, last year, one of my best performing assets was a fund that actively trades the futures markets for me, and that was up 60%. Also, my real estate portfolio was up significantly, and that really helped with the drawdown in crypto and even a little drawdown in stocks. I've been doing videos and education on crypto market cycles since 2013. And even then, a lot of people are either new to seeing my content or they're just new to the markets and they haven't been through a market cycle to truly experience that pain and understand the value in diversifying and having other asset classes that can offset the drawdowns in the crypto space. Okay, so with all that said, I wanted to leave you with 5 tips for getting prepared for the next market cycle. And this is what I'm doing. This is what I train everybody in our wealth building community on how to do. And step 1 is to maximize your current cash flow so you can build your fiat risk capital stack. Whatever you can do to bring in as much money on a monthly basis as possible, start there. Number 2 is hone your skills and your strategies. Decide if you want to be just a dollar cost average hodl stacker. Do you want to be a swing trader, a cycle trader, a day trader, a startup investor, or a mix of all of those? Decide which types of setups that you'll take and which crypto assets you'll trade. And most importantly, which ones you're going to avoid. Stay away, for example, from microcap illiquid shitcoins that are pumped by these influencers out there that are getting paid to promote these projects. Number 3, stick to a routine. Design a routine today while things are more quiet. Keep it simple, but do something to stay engaged with the markets every day. Even if it's just 5 minutes a day, don't lose focus. Every bear market, I see this happen. A bunch of people unsubscribe from the YouTube channel, all these social metrics like views on YouTube, Twitter followers, they go down because a lot of people get disinterested when prices are on sale. It's counterintuitive, and I've beat the whole buy low, sell high thing like a dead horse. But the way to avoid being one of those sheep that buys in at the high is to stay engaged now. Develop the skills now. And then number 4 is pretty simple, but a lot of people for some reason scramble last minute to make sure that your exchange accounts are set up, that you have hardware wallets, that you understand how to move fiat cash back and forth. And then number 5, be patient, right? Keep in mind that there's always another massive opportunity right around the corner. There's no need to overtrade or take low probability bets. Again, think like a hunter where you're patient, and instead of shooting at every random small game like a rabbit or a squirrel that walks by, save your ammo, which is your trading capital, for the big buck or the big game, whatever that means to you. And if you're looking to get around other traders and investors and entrepreneurs that have a track record of success in this space and are focused on doing the right actions, I invite you to come check out our wealth building community at the Skill Incubator. If you go to chrisdunn.com/community, you can use a promo code BuildWealth for the month of March to get 50% off of your first month or quarter. And I'll tell you, this is not a pump and dump group. We keep really, really tight reins on it. And we have OGs that have been trading crypto for a decade or more in this group. We also have people that are brand new. But again, this is no bullshit community. We're focused on everything that we possibly can do, from the personal finance side of minimizing taxes to the trading and investing of maximizing cash flow and net worth growth. So if you want to check that out, do that. Again, it's chrisdunn.com/community, and Build Wealth, all one word, is the promo code. So thanks for watching this video, and thanks for sharing it and liking it up. The feedback has been great recently. It's good to be back on YouTube, and I've got a lot more videos coming. Also, I'm getting ready to launch the second crypto trading book that is about 4 or 5 times as big as the one that I wrote in 2015. There's just so much more to pack into that. So I'll be announcing that within the next couple of months. If you like this video, again, share it up. Let me know if you have any questions in the comments, and I'll see you guys in the community. Take care.